Brad Williams, Frugal Finance. Here's a question related to credit cards. When can my credit card company increase my interest rate? Credit card companies can usually increase your interest rate if they give you 45 days of advance notice. But there may be steps you can take to lower your credit card interest rate. Your card issuer generally must give you 45 days of advance notice before it raises your credit card interest rate. For new purchases you make with that card, card companies are generally restricted from raising the interest rate for your existing balance, but there are certain exceptions. There's always certain exceptions. Keep in mind, you voluntarily signed up for this credit card. You're not forced to use that credit card. You have a lot of different options. So if you elect to use that credit card, you are at the mercy of the terms and conditions of that credit card company. The credit card companies, their only goal is to charge you as much as they can, and they would charge you more if they could. There's rules and restrictions in place to try to keep a leash on these vultures. But with that being said, interest rate changes for new credit card purchase. Credit card company is generally not permitted to increase your interest rate on new transactions during the first year of your credit card account. Well, the question is, who tracks when they got a credit card? I have no idea I initiated or opened up a credit card account. But are you really going to keep notice as to the timeline on your credit card? There is information on your credit card statement. It'll say you opened this credit card on X date. But again, that's just one extra step. You have to go in and open up and find your credit card statement. And those are just steps you have to take. But this is the procedure. After that initial year, they're required to provide 45 days of notice before an interest rate change. And any purchase you make with that card more than 14 days after the advance notices are considered new transactions. Interest rate changes for an existing credit card. A card company is not permitted to increase your interest rate on your existing purchases except under the following circumstances. A temporary rate, such as a low rate on a balance transfer, expired. The temporary rate may last for 6 months. You have a variable interest rate in the index to which your rate is tied. For example, the U.S. prime rate has increased. The minimum payment has not been received within 60 days after the due date. And then you successfully complete or fail to comply with the terms of an arrangement with your card issuer to lower your interest rate. Your protections under the Servicemen Civil Relief Act, if applicable, expires. Lowering your credit card interest rate. If your credit card company increases your interest rate after giving you a 45-day advance notice, it generally must review and reevaluate the interest rate for your account at least every 6 months. The card issuer may, and in some circumstances must, compare the rate you're being charged with the rate the card issuer would charge you today if you applied for a new card. If your rate is higher than what you would be charged as a new customer, the card issuer must reduce your rate. That's interesting. However, this rate will not necessarily be as low as your original rate. If your rate increased because of certain factors, including being late on a payment, the card issuer may consider whether factors that led the increase still apply. Generally, if you're late once, they'll waive that, but if there's a pattern, they're going to find that you're not a good customer and they're going to shy you away by increasing the interest rate. For example, you may be able to lower your interest rate by consistently making your payments on time. If your rate increased because you were more than 60 days late in making a payment, the card issuer must reinstate your old interest rate if you make 6 consecutive on-time payments of minimum balance after the effective date of increase. That's interesting also. So keep that in mind. If you screwed up once and they bumped up your rate and thereafter you make 6 months of timely payments, credit card company is supposed to lower your rate. Comment. Let me know if you've run into that situation. You were late. They bumped up your rate. You were good at paying your monthly credit card, at least the minimum payment, and they didn't lower your rate. And you've been fighting with them ever since. Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.